Yeah, I think we can start off, and let more people join as we go along. So good morning, everyone. Thank you for joining us. The theme for today's session is global investing. So I'm joined by Samyukta for this presentation, and post the presentation, we'll have a Q&A session as usual. Um, yeah, so we can get started. Sam, can you show the first slide? Yeah, thanks. Okay, so the global opportunity. So right now, we're at the beginning of a completely new scenario, right? Like post-COVID, there's no doubt that we've been um, like this has been a fast-forwarded process, like a shift to a new scenario, and we've had number one, technology develop incredibly fast, and number two, there's still a question of whether inflation will remain higher for longer, like a little bit longer. It looks a lot more sticky, right? Especially in the advanced economies. And in certain geographies, we've seen the monetary policy as well go tighter very swiftly and by a very large magnitude as well, right? We've seen like the US, which has had, like the fastest rise in rates in like multiple decades, and holds the same in Europe as well. So interestingly, we've seen more governments interacting with each other, interacting with other governments and forming bilateral trade agreements, right? And other, like strategic ventures and partnerships as well. And some of these bilateral agreements have the underlying mode of trade as their own currency, right? And so this brings in the question, is the world economy trying to de-dollarize in the long term, right? It won't be an immediate process, and it would take a lot of effort from a lot of various stakeholders, but it is still something worth keeping an eye out for, right? And in terms of economic recovery, we've had swift economic recovery in Asian countries and some other EMs as well, right? Especially in India, and the central bank here, the RBI, has been able to temper inflation quite well relative to other central banks, and the rupee has also been one of the best performing emerging market currencies when you look at it against the dollar, right? Um, and But Europe has been a different story, and your ECB has raised rates by another 25 basis points sometime last week, and the Eurozone inflation is expected to go to 3% next year and 2.2% in 2025. Keep in mind, the mandate is to be at 2% sort of inflation, same as the USA, right? And growth projections for this year, it currently stands at 0.9%, and despite all the rate increases, and 1.5% for next year and 1.6% for 2025. When it comes to the US has paused rate hikes this month during the June policy, and the rate right now stands at 5.25%. Earlier this year, we did have a couple of, shocks to the system where there was a bit of fear generated because of, the failure of a couple of banks, notably SVB Bank and, First Republic, which sparked fears of a contagion. Um, and again, now if we look at some more positive aspects, we can look at big tech. It's taking a whole new direction with AI, which is machine learning, and like wearable tech that we've seen over the last month. Again, we'll come back to the US later in this presentation. We also have a slide on the NASDAQ that we want to talk about. Sam, you can, yeah. Thank you. Okay, so let's see how the US became such a huge, like, global heavyweight, right? There are a few key things. So, firstly, as a reserve currency, the dollar has always been in demand, and because of that is why it's now very strong, right? And this makes the cost of borrowing cheaper as well for the US. And we have both capital markets and treasury markets that are very deep, right? And this again makes operations easier. It makes it more streamlined, and you have a large you have very large liquidity in terms of like getting your trade executed. There's always another counterparty, right, for your trades. Yeah, this is what a deep market will do to you. And they have both they have very large investors, and they have more investors as well. Your large investors could be your ETFs, your pension funds, hedge funds, right? And as the markets are deep, it encourages both it encourages even more financial innovation, like with new products, new product structures, right, and new product strategies. And finally, when you look at investors in general, you have investors there who have more of a risk-on mentality, right, where they are inclined to take risk if they deem the risk worth it, right? So these are some of the factors that that show us why and how the US has grown to being such a large economy, and there's no reason why we can't achieve it as well, right? So yeah. Uh, So coming from that, you have let's just give a few numbers. Numbers. Okay, you have 576 structured ETFs that are available, right? That use various strategies such as you have leverage ETFs, you have inverse leverage ETFs, you have ETFs that use certain quantitative methods, right? You have 8 broad asset classes. These include like um, these include asset classes like VIX, where it's based on the VIX index, which is a measure of volatility, right? And also alternative assets. These are categorized as separate asset classes, right? And you have 13 broad themes with a total of 58 subcategories, like how, to give you an example, you have solar energy and nuclear energy, which are subcategories under alternative energy, which is the main category, right? So you have a lot of options, right? Whereas over here in India, we already have 167 different ETFs and over 22 categories. So even though we are a relatively new player in the ETF game, we have come a very long way over the last 2 3 years, and it's constantly improving, right? We are seeing new products, we are seeing new product structures also come in, right? So yeah, we are growing very fast in this race, but then you do have a lot of options when it comes to investing outside India as well. We can go to the next. Yeah, so we have the 1 year stock performance for Meta, Apple, Microsoft, Amazon, and Google, which is Alphabet, right, on this chart. But now the interesting thing is, if you look at the year-to-date returns, right, if you look at from January 2023 till date, right, which is sort of near the midpoint of this chart, you have companies like Meta, which is here, and NVIDIA. These two have given triple-digit returns, right? These two, and one more company, I think Tesla, has given a triple-digit return as well. And the Nasdaq during this period, during this half year, has increased by nearly 40%. So the interesting thing is, if we remove the traditional FANG stocks and also NVIDIA, your weighted return for the Nasdaq, which is returns generated by each stock multiplied by the weight of that stock in the index, right? That's your weighted return. So weighted return for the entire Nasdaq has been 40%. But if I remove FANG and Nvidia, the weighted return drops by nearly half, right? So right now, at this point in time, it would be more prudent to be conscious of index valuations before investing today, right? But it'll also be interesting to see how the markets react to further economic data like interest rates, employment reports, and also growth, right? And again, hand in hand, that goes in with corporate earnings as well. And it would be interesting to see how markets react to all of these various factors, given the level of low growth expected this year and maybe next year as well. Right. Next slide. Yeah. Okay. So now we're heading into the more interesting part of the presentation. So AI, right? This artificial intelligence has been a bit of a buzzword for quite a while now. And here are a few interesting things that we have noticed. Um, so after the most recent earnings update, NVIDIA has broken the $1 trillion barrier, right? And Intel and AMD are their main rivals in terms of chips. But NVIDIA now looks to have a significant competitive advantage over the market because they make, um, you know, I still was, yeah. Ah, okay, sorry about that. I thought I had a bit of a connection issue. So, yeah, so that's on NVIDIA. Autocorrect and predictive search, they seem pretty rudimentary to when you compare them to what AI is doing now, right? But we are still in the very early stage of this industry, right? Even people like Elon Musk have expressed, they have expressed concerns about the fact that we do need sort of stricter regulations, right? When it comes to such a high level of technology, right? And that has a certain level of autonomy by itself, right? And we also had on the other side the asset management industry express concern that we saw a similar sort of rise during the dot-com bubble, right? But this is more coming from an investment perspective, right? When you've had valuations move up to at like this sort of a magnitude in such a short time, it is cause for concern. Sam, you can move to the next slide. So here's a study from the Boston Consulting Group, where they say to make the most out of AI, companies should look beyond automation and towards transforming the organization as a whole, right? Where companies deploy AI whenever and wherever necessary, and let it adapt to different contexts and circumstances. So we have so they've given five different circumstances where AI could be used. You can read through that. I'll just give you a bit of examples. So when AI needs to be an automator, right, um, where the context quickly needs to reach a conclusion, right? You can look at the context available and have it give decision and implementation functions, right? Have it suggest on functions, and the management can choose the functions, right? Whereas when AI needs to be a decider, right? It could optimize certain scenarios for you, right? What do you say and how do you say it and how best to say it, right? These are some sort of scenarios where you could have AI make a decision for you, right? And as a recommender, this could be used for scenarios like sales and promotions, right? And as an illuminator, where you know where the work that you do will benefit from AI, right? This could be used for something like designing products to a certain, to a certain structure, right? Or when if you want to look at it more from a customer service point of view, it can analyze complaints, right? For issues like more common issues like what you get on FAQs and such. And when there is when you need AI to be an evaluator, where there's not enough context, you can have something like you can have it involved in something like network planning and operations planning, and also like large seasonal sales that we see during Diwali and yeah, something like that. Sam, you can move to the next slide. Yeah, so this is another interesting thing that we came across from Bain. Um, So here AI is discussed with respect to marketing, right? And in the marketing space, AI is already being used for content generation and for customer interaction as well, right? So using data, it can also be used to personalize content on a whole different scale than what we've seen right now. In terms of like when you log into Amazon, you see suggested products and such, but using AI can drive that to an entirely different scale, right? So again, this will drive various aspects of the business, including engagement, you know, again, personalized content, and can also be used to, support employees and to reduce cost as well. For now, only IT stands ahead of marketing in terms of AI adoption, right? Which is huge. Where we've already seen this being adopted to such a large scale, and this is only going to get larger, right? But again, where are the valuations? That's the question, right? Valuations are pretty high right now. There can also be market consolidation in terms of AI. You can see large players like Nvidia acquiring other, like smaller players. Or if someone has a very unique sort of technology, you can have someone like Intel or AMD coming in and acquiring them to give competition to Nvidia, right? So there is still a lot of things that can happen in this space, and we just have to be careful when we're looking at it from an investment point of view, but from a consumption point of view, it's already taking hold, and it looks very very exciting. Like over the next decade, what we're going to see. Yeah. Yeah. So I'd like to invite Samyukta now to take over the rest of this presentation, and we'll pause for questions at the end.
Thanks, Roshan. So I'd like to begin by putting things back in perspective, right? So Roshan has talked to us a lot about what's happening on the AI and the technology side, and how you have all of these very exciting developments that have huge potential implications in the future in terms of productivity, in terms of the kind of industries that it could disrupt. So all of that is very exciting, and I think we do tend to give a high valuation to ideas that can change the future for us. But if we were to sort of look at things in perspective from a global thematic standpoint, right? Now, this is the market capitalization from roughly March this year. And if we look at Apple, uh, we are looking at like almost a 2 trillion sort of market capitalization, right? And that's, if I had to look at that in perspective with certain other things, that's saying that the entire precious metals, that is like silver, gold, copper, and your metals and mining industries, Apple is worth 1.5 times that entire industry. The same applies to the energy sector, right? Or if we were looking at gold and silver mining industries. And so when we look at these kind of themes, what we realize is that in perspective, maybe there is something that we can question on the valuation front. That, of course, all of these new and exciting things are there. It's difficult for us to decide what those valuations need to be like. But ultimately, let's compare it to some other industry, right? And this is something that we have actually looked at in Sphere. So, uh, in terms of gold mining company. So when we started looking at this theme, what we noticed is a fairly interesting trend, right? So from the 2008 crisis, so you see this gray patch in the middle of this chart, gold mining and your mining industry essentially has been expanding its balance sheet through larger borrowing. So the green lines show that they have actually issued debt on those years, and the red lines show us what the net debt repayment has been, right? So from 2008 onwards, you've seen this expansion until maybe 2015, where they've just, so around till 2012 really, where they've just gone and borrowed more money. And then in 2012 also, you had this consolidation phase because when an industry is over leveraged, it goes through stress at some point, right? And that stress can manifest in different ways through consolidation. That is, like, you'll have companies buying each other out, then getting more disciplined with managing their money and paying off debt. So from 2012 to 14, they were still borrowing, but it was more borrowing to survive. You also had bigger companies buy out and merge or acquire smaller companies. So then the big just became bigger. This was a tough phase. Like 12 to 14 was a tough phase for the mining industry in general. And then from 15, 16, what you see is that there's been this gradual deleveraging process. So that's when we saw a lot more financial discipline coming into this industry, where they've gradually reduced their balance sheet size, brought down their borrowings, and cleaned up their balance sheets essentially, right? So now you have uh, an industry where you're not paying debt. You're in a phase where interest rates are actually high. So those companies that do have money on their balance sheets are actually going to go through a tougher phase. And then we've also seen that the CAPEX for the last 12 months has been falling, which essentially means that all this expansion that they had done in 12, 13 is paying off in the sense that you don't have to spend any more money. So now this industry is not paying money in terms of debt. They're not spending money on expansion because they already have the assets in place, and your gold prices have been increasing. But what is happening on the value side? On the value side, uh, you're still trailing at a fairly attractive price, right? So your average uh, gold, so HUI is the gold index. So if we look at the price of the index to the price of gold, you're still one standard deviation below uh, your average or historic valuation for the last like 20 odd years, right? Which tells us something interesting, that you have a theme that is actually bound to do well. Like, all the cards are pointing in the right direction. You have a lot of positives, meaning I'm not paying debt. I don't have to worry about rising interest rates. At the same time, I don't have to spend on capital expansion because I already have all my assets in place. My gold prices are moving up. So this can only mean good things for the industry, right? And this is not something that's happening overnight. You're seeing this from 2015. So obviously from 2012 to 15, if there's been a decline in valuations, that would make sense, right? But from 2015 till today, we're seeing a sort of stable valuation. So the good news in this sector is still not been factored in, and that's where this theme becomes really attractive. So the whole idea behind this is that when we look at global investments, maybe it's not always the hottest or the thing that gets talked about the most, where that's not necessarily going to be the theme that always creates wealth for you, right? So when you need to go that extra mile. So even if you're looking at a theme like gold, the easy way is to just look at ETFs and MFs. But if you want to go the extra mile, then you've got to look at global mining funds. You've got to look at these industry trends which have shown us that there is a lot of value in something that other people have not yet noticed. And I think that's core to the Sphere way of uh, ideation and thematic selection, right? So this is just to wrap up. This is how Sphere can be your global investment gateway because we do go beyond the popular choices. So we showed you tech. There's a lot of exciting stuff happening there. It is a trend worth following. It is a trend worth paying attention to because it spells out a lot of things and there's huge potential. There's no denying that, right? But we also need to look beyond the popular choices because beyond the popular choices, you might find something uh, that shines like gold, which is basically what we have done. And this has also been a contrarian approach because everyone has talked about tech. There has been some steam in that. But we have also been looking at something where there's much more safety in terms of valuation. We've also looked at something which is contrarian because you've seen that nobody's been interested in gold miners since the time that they've been declining back in 2012. And for the last 5 years, it's really tested investors' patience, right? If you've seen the entire deleveraging phase and until today also, the valuations haven't really moved in the way that they should have. So for an investor who's come in, it has been fairly testing in the sense that you're not seeing the kind of results or rewards that you would like to see. But there is merit in following this approach, and time will show how that works out. And I think lastly, Sphere does right size India. Right? We are talking about global investments, but we shouldn't forget that India is actually a great investment destination. And if you look at all the global research analysts and strategists, they will be talking about the massive opportunity here. So not only are you going to get a flavor of the globe, you are also going to get a decent and right-sized exposure to your India allocation as well. And I think with that, we can wrap up and take any questions that we have.
Yeah, if anybody has a question, you could just type it out on the chat and we'll answer this.
You're welcome, sir. So I think roughly Sphere is at 250 crores in terms of portfolio size.
Yeah, 250 odd crores. Correct. Okay, so we have a question. What about gold mining leverage ETF? Okay, so leverage ETFs, yes, I mean there are options, right? You can go for leverage or inverse leverage, or like there are a lot of options. But generally, when it comes to leverage ETFs, you'll also have to see the risks. So there are 2x leverage ETFs, and I've also seen some 3x leverage ETFs, not specifically for the gold mining one, but I've seen others as well. So just like if you're looking at these sort of options, just make sure to understand all the risks, be cognizant that it's a 2x or 3x factor, where it's not only on the upside but also on the downside as well. So even a small volatility in the portfolio in terms of like a regular ETF or the mutual funds, etc., that would weigh in a lot more on your portfolio. Yes, you do make more money when it goes up, but also it is a sort of pain point if you're seeing a bit of volatility. And for example, if you lose like 10% on like the normal like the regular fund or the mutual fund, right? That is not as hard to gain back as gaining back like a 30%, right? Like when you lose 10% here on a 3x ETF, you lose 30%. And even like in terms of like looking at your portfolio, if you're not used to that, like those big swings in volatility, they can still affect you. So just be cognizant of like, yeah, the upside is there, but there are also major downsides.
Yeah, so I mean, see, the thing is, the regular option itself is fairly valued, right?
For
Meaning you have a lot of value to unlock in this. So the real question is, do you want to take more risk? Do you want to handle a much more volatile journey as an investor or not? And of course, like with global things, you need to be careful because there are other factors that could affect valuations, right? Like anything in the US markets may cause the volatility to be higher. So it requires a much higher level of dedication to watching your portfolio and tracking risks if you're going to take any leverage. That it doesn't matter whether it's a global fund or your own thing, right? That you're constructing from a domestic perspective. Okay. Question from a client. What is the overall average allocation that you take towards ETFs and mutual funds in Sphere? Will it differ from the other product NEO? So yes, NEO and Sphere will have different allocations. By and large, we'll try to keep them wherever it makes sense to have that kind of split, right? So I think overall we are close to 60% in equity stocks, and we have the balance in mutual funds as well as ETFs. But there's no fixed mix, right? In the sense that if ETFs are more attractively priced and we find a lot of thematic ideas that make sense from a constructed perspective, there might be a higher allocation to ETFs at some point. There might be a higher allocation to stocks at some point. We might like thematic and sectoral mutual funds more. So the mandate allows us to go from 0 to 100 anywhere, but I can show you the snapshot of where we are today. All right. Last question. I mean, the next question is who is PMS suitable for? And could you please let me know the age bar? So I think we as a house have 4 different PMS products, and they actually cater to almost every risk profile or every kind of investor there could be in the market. So there will always be a product that is suitable for you. So let's say you are focused more on steady compounding and a low risk, and you want only the best companies, then a portfolio like Trublu would really work very well for you. If you want a more high growth approach, which is where there could be higher levels of volatility, but it's also very selective, and uh, then I think Vriddhi works really well. And Solitaire and Sphere actually cater to a wide range of investors because you have a multi-asset as well as a multi-cap approach that works across all risk profiles. So I think depending on what your objective is, I'm sure whoever your point of contact and I thought is, they can help you select or narrow in on one or two products that work for you based on your risk profile, on your goals, and your investment horizon. Now, again, with respect to age, right? There is no age bar. It totally depends on what your goals are. Like if you are at 50, you want to retire in 2 years, then you need to think about which part of your retirement allocation is actually going to go into a PMS and what the need is for. So we have certain clients who have some of their retirement money for compounding in the PMS side, and they have a separate way of managing their regular income. So I don't think there's an age limit as such. But it is something that you need to plan out. You cannot randomly make an allocation to any investment. So I think 12 to 15% is a reasonable allocation to um, look at, a reasonable expectation to anchor returns in a product like Sphere. And if you take that, then roughly, I think at 15%, you will compound every 5 years to double, and at 12, maybe another 6 or 7 years. But yeah, I think these are realistic expectations. We could have we could have certain years where we exceed that or come below that as well, because the market, as we know, when it compounds, is not going to be a linear steady return year on year, right? But yes, that's the, I think, framework that we would want to work with and the target that we would like to take clients to, uh, as long as we're able to manage risk. If I feel that earning that 12% or 15% benchmark is going to involve taking too much risk, then we're okay to forego that, because we can wait for a year where it makes sense to take risk. So that's why I think, even if you see, when we recommend people to come into a product like Sphere, we would like one whole market cycle. So we say at least 5 to 7 years you keep in mind as the time frame that you want to compound in this product, and then it would make sense.
When it comes to equity allocation, is Sphere more aligned towards large cap or mid cap? Okay, so we don't have any any mandate saying that we need like X% in large cap and Y% in mid cap, right? It's a very dynamic product. So it gives us the opportunity to go to a lot of places, but we don't really, I mean, of course, it plays a factor when making the final decision, but we make decisions based more on themes as such, and we look at leaders in the space. So if you look at so in like some very like niche spaces, your leaders might also be small caps and mid caps. And if we feel like, valuations are justified and the sector is in a good place, we might go for those as well. Um, but in again, like in terms of valuation as a pack, small and mid cap valuations right now are quite high. But again, that like the valuation of the pack will not play a factor when you're picking certain stocks. So so yeah, we're not aligned towards anything as such. But if you look at what like the style that we play is completely different than investing in a small cap or mid cap mutual fund, right? Sam, do you have anything to add on this?
Yeah, no, nothing. So I think, see, Sphere is a very flexible product in terms of mandate, right? We have the flexibility to move across market capitalization in terms of stock selection. We have the flexibility to move across asset classes if we, based on where we are in the market cycle. So at any given point in time, your portfolio could look different, right? So a point-to-point comparison or comparing us, benchmarking us with, say, a large cap fund or a multi cap fund, uh, may not actually give you the best perspective, and it's better to look at it from a multi-asset. So it's kind of all of your investments in one place. That's the kind of product that SPHERE is. Because if you want a little bit of this and a little bit of that, and you want everything together in one place where it's easy to measure performance, like SPHERE works really well as a product in that particular manner. I'd also like to take the next question, which is about what extent does SPHERE integrate ESG factors into the selection and management of the portfolio? So governance is a very, very big part of our framework in all product selection, whether it's going to be a particular stock, whether it's going to be a mutual fund or an ETF, like that is something that we pay a lot of attention to. In terms of our primary focus in terms of filters is more on the valuation and contrast side. And in India also, as far as ESG investing goes, like it is picking up. You are seeing, for instance, green bonds got issued this year by the government, but it's still at a very nascent stage on the other two pillars. So there aren't that many options. You don't even see too much disclosure on the company sides also on ethical and social factors. But as that picks up, I'm sure there will be room for it within the framework. But as of now, I think our focus has always been very governance heavy. Within SPHERE, is the investment aligned towards each customer's risk appetite, and will the mix of portfolio differ if two of them are investing at the same time? I think this is basically more, if you expect two portfolios to be different, that has to be under an RIA model, and it cannot be a portfolio management model. Since this is a portfolio management model, you will see that investors who come in at the same time will have identical portfolios, because we cannot differentiate between one investor and another. That would go against the principles of having a portfolio management service. But what does tend to happen is over time, those who, depending on when an investor is able to contribute, there will be a certain level of customization that happens within their portfolio. So somebody who gives one time and doesn't add anything else will have a particular portfolio, whereas an investor who joined at the same time may initially have the same portfolio, but over a period of time, whatever additional contributions they make, the opportunities also keep changing, right? So their ability to participate in newer ideas will obviously change the overall structure and of their portfolio. You're welcome, sir.
You're welcome, sir.
We still have time for a few more questions. So if anybody else has anything on their mind, please do feel free to ask us. Yes,
Yeah, okay.
we're live on YouTube also at the moment. So I think you can just access the same link after the session as well.
Yeah, that should work.
All right. So I think we don't have any further questions. Once again, thank you everyone for joining us this Saturday. We hope this was an insightful session for you. And if you have any further questions, please do reach out to our team. These are our coordinates. And we'll be happy to get in touch with you, have a conversation about anything related to any of our products. And we look forward to seeing you next time.
Have a great weekend.